Now, under this framework, we are establishing 3 new programs to clean up and strengthen the nation's banks, to bring in private capital to restart lending, and to go around the banking system directly to the markets that consumers and businesses depend on. Let me describe each of these 3 steps. First, we're going to require banking institutions to go through a carefully designed, comprehensive stress test. This borrows the medical term. We want their balance sheets cleaner and stronger, and we're going to help this process by providing a new program of capital support for those institutions that need it. To do this, we're going to bring together the agencies with authority over our nation's banks and initiate a more consistent, realistic, forward-looking assessment about the exposures on bank balance sheets, and we're going to introduce new measures to improve disclosure. Those institutions that need additional capital will be able to access a new funding mechanism that uses capital from the Treasury as a bridge to private capital. The capital will come with conditions to help ensure that every dollar of taxpayer assistance is being used to generate a level of lending greater than what would have been possible in the absence of government support. And this assistance will come with terms that should encourage these institutions to replace public assistance with private capital as soon as that is possible. The Treasury's investments in these institutions will be placed in a new financial stability trust. Now, second, we will work together with the Federal Reserve, with the FDIC, and with the private sector to establish a public-private investment fund. And this program will provide government capital and government financing to help leverage private capital to help get private markets working again. This fund will be targeted to the legacy loans and assets that are now burdening many financial institutions. By providing the financing the private markets cannot now provide, this will help start a market for the real estate-related assets that are at the center of this financial crisis. Our objective is to use private capital and private asset managers to help provide a market mechanism for valuing these assets. Now, we're exploring a range of different structures, and we'll seek input from the public as we design this program. But we believe this program should ultimately provide up to $1 trillion in financing capacity, but we plan to start it on a scale of about $500 billion, and we will expand it based on what works. The third piece of this program, working jointly with the Federal Reserve, we are prepared to commit up to $1 trillion to support consumer and business lending. This initiative will help kickstart the secondary lending markets to help bring down borrowing costs and to help get credit flowing again. In our financial system, roughly 40% of consumer lending has typically been made available because people buy loans, put them together, and sell them. And because this vital source of lending has frozen up, no financial recovery plan will be successful unless it helps restart the securitization markets for sound loans made to consumers and to businesses large and small. This program will be built on the Federal Reserve's term asset-backed securities loan facility that was announced last November, with capital from the Treasury and financing from the Federal Reserve. We've agreed to expand this program to target the markets that are critical for small business lending, for student loans, for consumer and auto finance, and for commercial mortgages. Now, in addition, because small businesses are so important to our economy, we're going to take some additional steps to make it easier for them to get credit from community banks and from large banks. By increasing the federally guaranteed portion of Small Business Association Administration loans, and by giving more power to the SBA to expedite loan approvals, we believe we can turn around the dramatic decline in SBA lending we've seen in recent months. Now, finally, and this is critically important, we will launch a comprehensive housing program. Millions of Americans have lost their homes, and millions more live with the risk that they will be unable to meet their payments or refinance their mortgages. Many of these families borrowed beyond their means, but many others fell victim to terrible lending practices that left them exposed, overextended, and with no way to refinance. On top of that, homeowners around the country are seeing the value of their homes fall because of forces they did not create and cannot control. This crisis in housing has had devastating consequences, and our government should have moved more forcefully to help contain the damage. As housing prices fall, demand for housing will increase, and conditions will ultimately find a new balance, and you're seeing that happen in parts of the country today. But now we risk an intensifying spiral in which lenders foreclose, pushing house prices lower and reducing the value of household savings, making it harder for all families to refinance. The President has asked his economic team to come together with a comprehensive plan to address this crisis, and we will announce the details of this plan in the next few weeks. But our focus will be on using the full resources of the government to help bring down mortgage payments and to help reduce mortgage interest rates. We'll do this with a substantial commitment of resources already authorized by the Congress under the Emergency Economic Stabilization Act. Now, I want to add that looking forward, President Obama is committed to moving quickly to reform our entire system of financial regulation so that we never again face a crisis of this severity. We are consulting closely with Chairman Chris Dodd in the Senate, Chairman Barney Frank in the House, and their colleagues on both sides of the aisle on the broad outlines of a comprehensive program of reforms. The President's Working Group on Financial Markets is beginning to develop detailed recommendations, and we will start working closely with the world's leading economies on a set of broader reforms to the international financial system in preparation for the G20 summit in London on April 2nd. The success of this plan, the success of our financial stability plan, is going to require an unprecedented level of cooperation here in the United States and around the world. Federal Reserve Chairman Ben Bernanke, FDIC Chair Sheila Bair, John Dugan, the Comptroller of the Currency, and John Rich, the head of the Office of Thrift Supervision, I want to thank them for helping shape this plan, and I want to thank them for their commitment to making it work. This program is going to require a substantial and sustained commitment of public resources. Congress has already authorized substantial resources for this effort, and we're going to use those resources as carefully and as effectively as possible. We're going to consult closely with the Congress as we move forward, and we're going to work together to make sure that we have the resources and the authority to make this work. Later this week, I'm going to be traveling to meet with the G7 finance ministers and central bank governors in Italy, and there we will start the process of working with our international partners to ensure that we're working together to help strengthen the global economy and to help repair the global financial system. And we will work closely with the leadership of the IMF and the World Bank so that they can deploy resources quickly to help those countries around the world that are most at risk from this crisis. Now, many of the programs I've discussed involve very large numbers. But it's important to recognize that these programs involve loans and investments with terms and conditions that will help protect the taxpayer and help compensate the government for the risk we are taking. And because of these terms and conditions, the risk to the taxpayers will be less than the headline numbers. Our obligation is to design these programs so that we are achieving the largest benefit in terms of supporting recovery at the least cost to the taxpayer. And we take that obligation extremely seriously. But I want to be candid. This strategy will cost money, it will involve risk, and it will take time. But as costly as this effort may be, we know that the cost of a complete collapse of our financial system would be incalculable for families and for businesses and for our nation. We are going to have to adapt our program as conditions change. We will have to try things we never tried before. We will make mistakes. We will go through periods in which things get worse and progress is uneven or interrupted. But we will be guided by these core principles of transparency and accountability, dedicated to the objective of restoring credit to families and businesses, and committed to moving our nation towards an economic recovery that is as swift and widespread as possible. This is a challenge more complex than any challenge our financial system has faced. It's going to require new programs and extraordinary action. But the President and his entire administration are committed to seeing it through because we know how directly the future of our economy depends on it. Thank you very much. Thank you for coming.